If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is June 3rd, 2020, and today is Wednesday morning. So looking at the highlights of the day, we're watching oil to continue to push higher to $37 a barrel. Now, there is some rotation happening in the markets, but first, let's take a look at the economic events of the day. So we're going to be starting out today all day long. We have G7 meetings, and that should affect all symbols. So just be aware of that. Now at 4 o'clock South African time, out of Canada, we have a Bank of Canada rate statement coming out and an ISM non-manufacturing PMI number coming out of the United States. So important numbers coming out later today. Now remember, this Friday is NFP. So I'm just highlighting that once again. Now looking at the markets, we're watching the US dollar actually weaken across the board, especially to the euro, the Canadian dollar, and the Aussie, which gained versus the US dollar specifically. The GBP actually very silent and uneventful little rally yesterday for the GBP. Now looking at the Dow Jones, it continues to rally, but keep an eye on the resistance because it's filling the gap right now at 25,800-ish level. We'll take a look at that in just a second. Looking at the commodities, gold sells off to $17.25, while we mentioned before oil pushes higher to $37 a barrel. And looking at the stock, tech stocks continue to strengthen while the bank stocks are unchanged. Let's take a look at the markets and see what we can expect from today's trading. So we're taking a look here at the Euro USD at a daily chart, and you can see really the effects of this. Look at this. Nice little above the resistance line as we broke it earlier this week. And then we took it from there and just continued to rally. This is a 100-pip move. This is very eventful for this time of the year, okay? Both because it's summer trading and both because the euro has been really flat for a long time. And this is kind of bringing us back into December area. Okay, so we do have a resistance-ish level at this 112-ish level, so just be aware of it. If we don't break above it and don't hold above it, we could see ourselves retracing here. Now, what is encouraging here is that it's across the board. Looking at the USD Canadian dollar, we mentioned this the other day, breaking the support of 135, and it does need to break it with some oomph, and perhaps we'll get that with the rate statement today. So something to consider. Now looking at the Aussie USD, also earlier this week we had a rate statement, and now pushing up higher to 69.35. Now we haven't been in these areas for quite some time. Okay, this is taking us pre-corona situation where we've made that full recovery from before what happened with the markets and the great volatility that we saw right afterwards. Now looking at the GBP though, unchanged, okay, trading at 25.85 on this resistance-ish area, so it could play catch up or it may fizzle here and then make a correctional move. Now looking at gold, as this is continuing to trade this week, we see it actually retracing to 1725-ish level right now as this nosedive. Okay, this was really a decent play yesterday, and I mentioned this yesterday. This was a fantastic opportunity to short it at 1741, and sure enough we got that. Now looking at oil, this thing is not taking a break. Okay, it's really just buy. Okay, the next real resistance-ish level is when we close this 42-44-ish gap. Okay, so we still have some way to go there. All right, so just be aware that at any point, you know, that this is as strong as it is. Okay, I do expect it to continue because the lockdowns are easing. Okay, so the trend is your friend. You want to be on the right side of this. You don't want to be looking to short it and be a hero. Now looking at the Dow Jones, trading at 25,030, we're looking at a daily chart. Now the reason I'm showing you this daily chart is for two reasons. Number one, we had this gap down. If you guys remember back in March, we had this gap down just about the beginning of March 6th, and we gapped down, and that really capitulated our sell-off. Now we've made this recovery, okay, from 18,200-ish level up to 25,800-ish level, and we're closing that gap. Now, if it doesn't break above this, if it doesn't continue rallying above this, then I do imagine that we'll make a correctional move. However, this has still been very strong. And really what's been strong in the market is the tech sector. Okay, that's really what's been pushing us higher. Looking at this NASDAQ, we're back to all-time highs and even breaking higher. Okay, so we're really right there. You got to look at it on a weekly chart to give us perspective there. And so we've made the recovery from before coronavirus. Okay, this is unbelievable. All right, nobody would have thought that it would happen so quickly. Now, looking at Apple on its highs at 322, looking at Amazon close to its highs, looking at Microsoft close to its highs, looking at Facebook close to its highs. Okay, so the stocks are still strong. What is not strong is JP Morgan. Okay, the bank stocks are fizzled here. Okay, so if we do see a correctional move in the market, and this may happen because we are in June and we do have the NFP coming out Friday, and if it's not very encouraging, we could see some retracement in the markets again. So just be aware of that. Okay, now lastly, looking at Bitcoin. Now I did mention this yesterday. Okay, if it did sustain above this area of 10,000, but it was a fake out breakout and we broke out lower. Okay, so 9,800-ish level was your resistance-ish level. I did mention that yesterday, and sure enough, we broke below at 94.52. Now, it's got to sustain in this upper range for it to possibly break out, but I still want to keep it on the back burner in case it does still break out. This is Fred Razak. I want to wish you guys a great trading day.